want to thank Grega for his Elliott Views, the Wizard of Waves award winner on FX Street. And I tell you what, the momentum will keep going with Seth Golden. I'm looking forward to meeting and talking to Seth. So Seth, I'm making you the presenter right now and looking forward to seeing your screen and hearing your voice. I see your screen, buddy. Let's see if you're unmuted. I'm unmuting you right now. You're self-muted, so you have to unmute yourself.
Can
There
you hear
go.
me now, Dale?
Yeah, I got you, Seth.
Oh, thank you, thank you. It's my pleasure to meet you, to be here with you and your audience. Thank you for the invitee.
Oh, and what great timing, you know, with all the volatility. And I know you have a passion for trading VIX products and VIX, and it's great to meet you, Seth. I always, you know, the first time I interview somebody, I'm always interested in how they ended up in this industry and what was your foray and into it. Where did you come from before you got involved in the trading business?
Well, I came from the retail world. I worked in retail for a good 12, 13, 14 years maybe. I worked previously for Bed Bath & Beyond, Target, the former Sports Authority, through college, number of different retailers. But what really got me into, I was always fascinated by the equity markets and portfolio management and just the general idea of investing in the markets. But what really, you know, my foray into the markets, or what propelled me, was in don't you hate when you start the century off with 19? It kind of dates you already.
No.
In 99, I was looking at my grandmother's statements from her brokerage account. And, you know, this was, you know,
before the bubble. Yeah.
And it was A.G. Edwards was her, you know, the manager of the account. And, you know, I started looking at them, and each successive time that I would look at it would be less and less money. We were talking large sums of money, you know, for a 90-year-old woman. And I started to get concerned. She really didn't know one way or the other at that age. She had, you know, the onset of dementia and whatnot. So I was taking care of a lot of, you know, her daily issues and you know, making sure nurses were there in her home and everything.
What a great grandson. A lot are too busy. Nice.
Yeah, so I told her at one point, I said we should go and meet with the, you know, the manager in the account, and we did, and we sat down, and I realized that she was in assets that she had no business being in. She was in somewhat risky assets, and it just didn't make a lot of sense. A lot of mutual funds, and you know, what I knew of, you know, the risk value premium and her age and everything, she should have been more heavily levered into other asset classes than the, you know, general equities and mutual funds. So
it didn't make a lot of sense, but it made a lot of commissions,
which I later found out was the rationale for the, it was more about the brokerage commissions, like you just said. So we liquidated the account, and I just decided to put it into an account in her name with Scottrade. This is way back when. And you know, I would just look at the markets every day. I, you know, took out my little spreadsheet on the stocks that I liked, that I understood, you know, the company's business models and I was familiar with. And I would just track the movement day in and day out until finally, I think in 2000, you know, I did my first trade, and that's where it all began. From there, you know, I was still working retail. I started a pretty good career with Target, and that's pretty much where the social media community came to know me best. I was featured in the New York Times last year as the quote unquote ex-target manager turned millionaire by trading the fear index.
Wow. Cool.
Yeah.
Yeah, nice. So and your first foray into it was, you know, just out of caring for somebody. So let me ask you this. How did you gravitate towards VIX products? And once you knew this was something you wanted to delve into, did you have other people that influenced you? How did you learn to trade? Did you have mentors or books that influenced your methods today? Or were you completely self-taught?
I don't think I would lean 90% self-taught, 10% reading, discovery, making mistakes, just general experience. But yeah, I did read a couple of books, around the, when I started first trading, 2000, 2001. Mostly what I learned from those books was the state of emotion that goes into, investing your own capital and how
Was
to.
that trading in the zone?
It may have been. It may have been. It was.
Trading's all in our heads, isn't it?
Yeah, you go back to Amazon's hit list, and
Yeah.
I chose the most popular one. But so yeah, mostly 90% self-taught. I did a lot of day trading back then, in and out in the same day, not holding anything overnight, unless I had to, because psychologically nobody likes to take a loss, and when you are a new trader, you don't realize that there are advantages to taking small losses as opposed to bigger losses, because you think something's going to turn around for a rationale that you've not supported with anything but hope, per se. So over the next couple years, I developed more into a swing trader. And I would say by about 2010, so after the great financial crisis, I was actually doing sell-side analytical work for a boutique research firm that we created, myself and some partners, called Capital Ladder Advisory Group. So that really helped or facilitated my some of my better trading strategies over the years, doing actual sell-side analytics, deep dive research into and staying true to the categories or the industries that I know. I do truly believe in invest in what you know and understand. Anything beyond that, you generally will have to lean more heavily on third-party works, ideas, and opinions. And that just never carried a lot of weight with me.
Okay, so let's go fast forward and talk about some of your methodologies and some of the things that you're seeing and what you look for market tells. I know you talk about contangos and backwardation a lot when you're trading VIX. So take it away.
Yeah, so I started learning first about the volatility complex, the VIX, and the derivatives of the VIX within the VIX complex back in 2011. It was in 2009 that the first exchange traded products, VIX exchange traded products, came to market. But when I was working for Capital Ladder Advisory Group, we catered to the hedge fund industry. Our research and white papers were purchased by subscription, the different institutions and hedge funds. And one of our clients asked me to read, and this was in 2011, this prospectus on ProShares for ticker symbols SVXY and UVXY. Okay. So I read it. I didn't really understand it because I didn't have any foundational grounds in futures. So I just didn't understand it that well. But I gave it a good read, kind of brushed it to the side. But then, I told the client that it seemed pretty complex. It's probably, better to give this to somebody else with an expertise in futures and the derivatives market. So he believed that I could do it. At that time, I was basically the axe in SodaStream, Keurig Green Mountain, a lot of the consumer packaged goods stocks I was writing research for, and making calls, if you will.
Isn't it nice when someone believes in you more than you do in yourself?
Absolutely. He decided, I believe in you so much, we'll pay you an extra fee.
Oh, well, now I understand the motivation.
No, not entirely. I want to learn. I'm always up for a good challenge.
Yeah.
And
okay.
This was something that it confused me. It just confused me. But if somebody else believes in you and they've been with you a while, you want to give it your extra effort. And so I did. And I went the extra mile. I actually, was able to get on the phone and have dialogues with, the fund managers or the authorized personnel. And that's what, brought about the evolution in my understanding, or, the light switch went off. And so I felt, okay, now I understand what these products are, these VIX exchange traded products. Let me put it into action. So I started trading, excuse me, UVXY about 2012, and it was going badly because I read the prospectus and I believe that this is, the prospectus says this, so you should do that. Okay. The problem I shouldn't say the problem, but with these particular products in this particular industry, being the VIX complex, you have to be able to think about the prospectus, the verbiage in the abstract. Some of the way that the prospectus is written, you could almost say it's because in order to get it approved, they have to write it this way. For all practical purposes, though, you almost have to do the opposite of what the verbiage is telling you. And that's when I started to see success in participating within this particular complex.
By taking the other side of the trade because of an erosion and decay. And I bet did the prospectus say anything about you will suffer going through multiple reverse splits over the years?
Yes, and you could suffer large drawdowns if you hold overnight. They only recommend it as a day trading product, basically. Nothing to be held in long duration. Use options. All of that type of suggestive language is in there. But I learned that if you did the opposite, that's where the greater success is. Anything you're trying to day trade, there's a certain amount of gambling involved, because on any given day, the market can go in any different direction. A sector can go in any different direction. So what I found out rather quickly was that if I had actually given myself more duration in the trade, it would eventually work out to my understanding of the overall VIX complex, or fear in the market. And I have been doing that pretty much ever since. From 2012 to present, I've basically been investing in VIX exchange traded products, which is in and itself an oxymoron, so far as most people believe, how you should participate in the complex. Be where they're not is what I've been doing. Where most people are, not participating in this manner, I am, and it's worked out well.
And can you give us a little bit more detail? So most people are going to just be outright buyers of these products. What's your methodology? There's been a fortune made over the years writing or shorting VIX derivative products like TVIX and etc. And except for what happens every once in a while, like January, February, when the VIX spiked to 50 and wiped all the sellers out, that's the way most people go. Is that what you normally do?
So along my journey in the VIX complex, I learned that in order to understand volatility, it would be best to also understand macroeconomics and what's going on that influences the markets and sentiment over time. So I got heavily involved in all aspects of economics, be them homegrown or across the pond, if you will. So that has helped facilitated my participation as well. But so far as an overview on how exactly I trade these instruments, UVXY has been my favorite. It's an inverse leveraged
Right.
exchange traded product, formerly leveraged 2x. But since, as you noted, Dale, back in February with what they call the Volmageddon, where the VIX spiked over 100% in a single day, a lot of the VIX exchange traded products were deleveraged.
Okay.
So UVXY.
What was the one that there was one that was even delisted, wasn't it? I think it was a long.
Yes.
No, it was a short. It was a short
It was
VIX product.
It was XIV.
Yeah, that's it. That's it. It's
Yeah,
gone, right?
that one's gone. That was a Credit Suisse instrument that was eliminated, and then you had SVXY, which was also delevered. It was only a 1x instrument, but now it's 0.5x. So,
Seth, I'd like to switch gears since you,
sure.
told us a little bit about that. You had to really learn about macroeconomics and how the market's kind of a big jigsaw puzzle. I believe that the fulcrum of the wheel is currency and all other asset classes spin around it. What's your view on what's happening here with the dollar strength and emerging markets and global markets under pressure, and finally the rest of the world has pneumonia and we finally caught a cold? What are you thinking here about market structure?
Well, I think the world is, they're trying to gravitate to where the last banyan of strength is, and that seems to be the U.S. economy. I think we're in a stage of somewhat self-fulfilling prophecies where, we feared the peak in economic cycles for so long, and now that we've had this long-standing expansion cycle and bull market, global and domestic, that it's got to come to an end because we're hitting these certain levels with regards to the various different economic indicators. So from that point,
do you agree with that? That just because the duration was long, that I hear a lot of people say we're late cycle, but late cycle and the end of the cycle are two different things, aren't they?
Right. We'll know in hindsight, of course.
Right.
I'm of the opinion that we still have a good 12 months at least. It could be longer than that, but we have a good 12 months of expansion ahead of us.
Okay.
Will we slow? It seems more than probable that we will have a similar slowing growth here in the U.S. going into 2019. You have just the general laws of large numbers that prove an obstacle, as well as consumption tending to hit a peak. It doesn't mean that it from that level it'll crash, but you get some moderation. Moderation in and of itself will prove to slow the economy. Do I think it'll result in anything recessionary next year? I think that has a lower probability. So duration-wise, no, I don't subscribe to the theory that because we've been in such a long expansion period that there's an expiration date. It comes down to the consumer. We're 70% consumer-driven economy. As the consumer goes, we go. Can we be impacted from time to time, with outside influences? Yes, but ultimately it comes down to the consumer and what the consumer is doing.
Okay. All right. So we have this big break in October and had a real nice relief rally in S&Ps after the election, actually 61.8 back, and now we're giving up a lot of those gains. You have a market view on, as a VIX trader, I would assume that you have biases or signals directionally. Do you?
Yeah, I look at various signals. I look at skew. I look at the volatility of volatility index. I look at the put call ratio. You name it.
What do you do here? I mean, and sometimes the right trade is no trade. You know, that's an option. You know, sometimes I'm not afraid to say I don't know. I'd rather bore people than mislead them. So, are you in an I don't know stage here, Seth?
No, I still have some confidence regarding the year end and how the market will trend through year end. I do believe we'll finish the year higher than where we are right now. Even if that means that it'll be choppy, I do believe we'll be higher.
Do you think the Fed lows from early in the year hold in the S&Ps while maybe being vulnerable in NASDAQ or something like that?
That would be tough. I would totally concede to if we went down that low from the recent peak in September, that would be tough to come back from for sure. We don't have a lot of time, you know, to make it back from there. But if we hold the October lows, we have the retailers reporting really strong sales, and you know, we'll hear from Walmart, we'll hear from Target, Macy's, etc. in the coming days and weeks. We have retail sales coming out on Thursday, which should be a strong report. The economic data is strong. Of course, that comes with its own headwinds, which is, well, then why does the Fed need to pause? And that's, you know, part of what's weighing on markets is, you know, the Fed hiking interest rates and seemingly on autopilot. I think in December, you'll see some adjustment in the language that might reflect.
So we get a dovish rate hike? Is that your expectation?
A dovish rate hike, yeah, that possibly points to, you know, a pause at some point in 2019. So you get the rate hike, which is almost a certainty in December, but the language may signal or flag a pause at some point in 2019. And that's really what the markets want to see. In my opinion, the markets want to see a Fed that's not on autopilot, that even though their you know, inflation mandate is well in check and the employment mandate is well in check, other factors are impacting you know, certain aspects of our economy and could impact.
How about the tariff impact? Does that go into your equation at all?
It's
or is it more psychological?
25% on 250 billion sounds like a lot of money. It does. It really isn't though. And when you look at corporate, you know, what companies are saying on the earnings call and how many times they're mentioning it, you know, in Q3 versus Q2, they've actually mentioned it less times. The impact is minimal, but it's not. It's a confluence. So all the questions that you're mentioning or asking, Dale, are a perfect perspective of how so many things right now, the U.S. dollar, crude oil, will the Fed, you know, hit the pause button or not? Tariffs. When you combine all that into, you know, a market that has gone up for so long, an economy that has expanded for so long, and in the FANG stocks that have, you know, taken the tech sector down, you've got a big wall of worry, probably the biggest wall of worry that we've had in the last 8-9 years.
I agree. Yeah. May you live in interesting times.
Yes.
The Shakespearean curse. Well, it was definitely an interesting 25 minutes with you, Seth. Why don't you take the time to show your website and let people know how they could reach you and what your services are like, and you know, you could show it now and talk about it.
I'm sorry, can you see my screen?
Got it. Yeah, so there's a Phenom group.
Yes, so we started phenomgroup.com December 26th, the day after Christmas last year. We specialize in VIX trading strategies, but we also, because we're VIX oriented, we focus on macroeconomics. So most of the daily articles and research reports have that slant, if you will.
Okay.
We offer a weekly research report largely focused on U.S. corporate earnings and macroeconomic fundamentals. It's a very interactive site. It has everything from chat rooms to private messaging.
Beautiful.
Yeah, you can.
You believe in the value of communities after having one?
I do, because they lend themselves to.
Oh, there's David Lincoln, the famous Dave.
Yep.
I know Dave. Okay. Yeah.
Great guy.
Right. Yeah.
So the site is very interactive. We have daily videos. We have a research video library down here on the bottom. But as you can see, you know, and you can do all your postings. You can, like on Twitter, you can have your own profile page where you put out your own tweets and posts from here.
Cool.
I'm sorry.
I said cool.
Yeah.
You know,
so
you know, I'm from the 60s and 70s.
We offer trade alerts as well as investment thesis. To date, all of our trade alerts have a 100% hit record. We had a huge oil play in Anadarko Petroleum earlier this year with a 35% gain. We had a Facebook trade with a 10%, an XRT, which is the retail sector, spiders, 10%. We try to get a 10% return on investment for our actual investment thesis, and we've done that pretty much all this year. We had a great trade on Walmart. Right now we're in the financials. Starbucks was another winner that finally realized itself in this quarterly report, which we did well over 10% return. And then we do a lot of scalps and swing trades through our private Twitter feed.
Okay, you have one of those too.
Yeah.
What do you charge for your? What do you charge?
So for a premium subscription, which gives you access to everything that I just mentioned, it's $39.99. For just the research reports and daily articles and halftime video blog, it's $2.99. And you also have access to the chat rooms. The main reason we charge for that is to keep spammers away. So.
Okay. Well, you know, it sounds real reasonable for the quality of content that you provide, Seth. Like it or not, you're now my trading warrior brother, and I want to thank you so much for taking the time out of your day to address our community, and wish you a great holiday with your family and trading season, and that gains continue. What part of the country are you in, Seth?
We are in a chilly Florida, so it's 68 degrees right now.
Okay, so you know, no snowflakes for you, but have a great fall and winter trading season, and let's keep in touch.
Will do. Thank you for having me, Dale. An honor to have that badge as your trading warrior brother.
Thank you, Seth, and you're a great life story of someone that you know. Your journey. God bless the broken road that led you right to VIX.
Yes, thank you very much.
Okay, buddy. So that's a wrap. Face Turnaround Tuesday. Tom Lando thanks you, Seth, Ashari. Everyone have a great day. Remember, don't just count your pips, count your blessings, and I'll see you tomorrow or in the member chat. Adios. Thanks again, Seth.
Thank you. Bye-bye.
Bye-bye.